Hi everyone, welcome to the live Admiral Markets webinar. My name is Chris. Today we're going to take a look, of course, at the Forex market, commodities, stock indices, basically looking at price action and technical analysis as you are used to. First of all, though, be aware that the webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you. Also, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Before trading and when looking at the markets, always be aware of the risk, the events, Forex calendar or calendar in general for the economic calendar, basically, to understand what's going on with regard to news, conferences, press conferences, data, potential bumps in the road, basically, expected ones at least, scheduled ones. There could always be unexpected ones, and that's of course always good to keep an eye a bit on what's going on in the news. But the calendar is a good way to start with expected developments and news and data. So be aware of that and make sure to be prepared for volatility around big events, maybe even medium events, and adjust your trading plan accordingly. You can find that out with admiralmarkets.com, but also, of course, you'll find out a lot more. As you know, I've been already informing you week after week here, market heat map, market sentiment, traders blog, analysis, fundamental technical waves, and that's just part of analytics. Then there's education, there's platforms, information about WebTrader, MetaTrader 4, and the Supreme Edition, which is extra plugin from Admiral Markets with a lot of different indicators and other tools. So a lot of info here, as you can see. How to trade as well, of course, logically, is possible too. So let's take a look at the markets and take a look at what's going on at this moment. We have the dollar-yen in front of us right now. And basically, dollar-yen making a correction and still bouncing to the upside. If you saw my wave analysis, you knew that I was looking for a wave 4-5. Price went down to 111.50. As far as I remember, that just barely missed my validation spot, but let me double check that. So that could have been maybe something for you to trade, this kind of wick here at the bottom indicating a potential bounce. And let me check those fibs. My headline said dollar-yen breakout above resistance and pull back to wave 4 fibs. But I'm just curious, I hope it didn't get invalidated. No, indeed. 61.8 fib was the key level, 111.50, and that's exactly where it bounced, plus the Keltner. So you can see that was a key decision spot. Support on the left, support right here from the tops, the Keltner, and you see the reaction of the wick. If that was not enough, the next bullish candle kind of sealed the deal and price has moved away either 49 or 62, 63 pips away from that zone, depending on the entry. 111.50 could have been an entry too, of course, potentially, but that would have had to be a pending order, probably not a market order, because price, if you wait for some kind of confirmation of a reaction to a level, then you would need to wait for this wick at the very minimum. So 111.50 would not be an entry unless you use a pending order. I use pending orders, but only when I have high confidence in the setup. If there's some doubt, if I think that there's benefit to wait for price to show its response, its reaction to support or resistance by showing a candlestick pattern, for instance, then if there is some doubt or it's not a really great setup, I'd rather wait for confirmation. Most cases, I'd rather wait for confirmation. In minority of the cases, I sometimes use a pending order, but I like confirmations more. At this moment, dollar-yen, however, has pushed away from the intended bouncing area and it's close to target. So I'm not going to spend too much time on this one. But I had the chart on this time frame, so I just wanted to, or this currency pair, so I just wanted to continue with this. But did anyone take this trade by any chance? Anyone in that trade? To break, here was already a first breakout, by the way. Maybe some of you took that first breakout. This was a break, classical break, pullback, continuation. Let me put the BPC there so you can see that a bit better. Classical pattern and a good trade. Anyone trading the initial break or the pullback did well. Now I think the price is too close to target, 112.50, major level, quarter level. I would say aim for that 112.40 to exit, but I would not be entering new trades. And if anything, who knows, might be worth keeping an eye on the daily chart to see if there's any strong reaction at the resistance of 112.50. All right. Now, euro dollar is an interesting one. Obviously, I said Monday that I was bearish because of the fact that, in my view, although I did say that if it breaks above 113, I'm not bearish anymore because, from my perspective, price was going sideways. As you can see, obviously, most of you can see that, right? Price is going sideways. I still lean towards bearishness because of the pattern of the potential head and shoulders here. I thought that this was a strong resistance zone and could be a reversal kind of pattern unfolding. That proved to be wrong. Price has already broken through 113, even if it's only by 3 pips. That particular analysis is invalidated. So the upside that I did favor yesterday did not pan out. It did not happen. And in fact, price is proving that that particular analysis is invalidated. Pure and simple. Invalidated, didn't happen. Of course, it is true that price was in the sideways zone. From that perspective, it could easily break to both sides. That's something we always have to keep in mind. I did lean towards the bearishness because of the fact that when I looked at the weekly chart, I saw strong resistance in here. I saw some pretty good 4-hour weekly candles here. Therefore, still leaned towards the downside. Price is disagreeing. Price is breaking through 113, and I think that, let me double check, that is key because here the high is 112.99. That means that this top is being broken, which means that this is not a wave 1-2 anymore. And this is a bit of wave analysis kicking in here. Bear with me. I know that not everyone is a big fan, but that does invalidate that structure. So what does that mean? That basically means that this is not the start of a downtrend. This could still be, itself could be downtrend. The thing was that this is looking like a triangle, A, B, C, D, E. So from this perspective, let's see. This level could still be important right here. I'm not sure how I have the waves on higher time frames. Let me quickly take a look at that, which you can find on Admiral Markets as well. Let's take a look together because this is an important spot at this moment. So let's take a look at this weekly chart very quickly. So as you can see, I have the wavy ending here. So that's definitely invalidated. What could still be valid is that wave D is here and E here. That looks a bit odd to me. Therefore, this level could still be key, but it does not look that great. That would be 113.50, 60-ish, 65, 113.65. Is a possibility, but it's not a great one. I don't like this D or E, quite small compared to the A, B, C that we saw before. Another factor, it's difficult to explain how the euro dollar could still remain bearish, and that's a pretty. I don't want to make such a bold statement maybe without double checking it, and I think I'll do that tomorrow morning with a fresh pair of eyes, to be honest. But if that is true, what could happen is that this particular correction that started March 2015 up to October 2016, that correction was 1.5 years, let's say, right? That's lengthy. Of course, this is a weekly chart, but still. Then we had a downtrend, pretty short actually, a few weeks, right? And ever since we've been up. So by price pushing through this level, which kind of invalidated the idea that this could be a wave 1, 2, 4, 3, what we might have to start to think about is that this wave 3, this wave 4, and this wave 5 is completed. And this could be the start of a new upside structure. So that was a possibility when you saw this already. It might not have been an ABC, but a new upside, and it seems to be that that is becoming more likely. I still want to basically be cautious with that. I want to double check my own analysis, but one thing is for sure, the euro-dollar bulls are in control at this moment. How I would trade it, I'm not sure yet. This is a new development. I think that I would want to keep an eye on the daily chart, this daily candle. What I would like to probably see is a daily candle close above 113. That would be sweet, or at least, I'm not sure how what the high of this candle is going to be. All right, the difference is about 125 pips. So I would not like to see more than 40 pips wick at the top. If it is, that's a sign of weakness. If it's less than 40 pips wick, that's a decent daily candle on the euro dollar. And I would expect that tomorrow we might see a continuation. We might see some retracement first tomorrow, but either tomorrow or the day after, I would say there's a good chance of continuation. All right. Pound dollar. Also moving to the upside, was not able to break through 127 at the weekly pivot point. Use that as a bouncing spot up to the minus 61.8 target, which I do think is still a strong resistance level. And for those looking at the waves might have seen that as well. You can see, sorry, let me go back and we'll take a look at that in more detail. But you might have expected the fourth wave already. So maybe some of you were able to trade that bounce at the weekly pivot point either through this wick or maybe this bullish candle. Now I would be looking for a downside though. Minus 61.8 target. We have the top of the calendar. We have a moving average, plus we have resistance here. In my view, this is potential for turnaround. Definitely not some area right here where I would want to go long. That was good here, but not here. Price is at support here. Now it's at resistance because of the target. So no longs. Shorts possible, but I would want to see some kind of 4-hour reaction to that level. And there are different ways to trade it. The daily chart, candlestick, 4-hour chart, candlestick, 1-hour chart, looking for some momentum and a correction and then continuation. Some possible ways to keep analyzing the charts with those ideas. Regarding the pound, you will see in the wave analysis today that I was expecting wave 4. I wanted to zoom in. Here you go. You can see wave 1, 2, 3, 4. So I was expecting this to bounce and then move up to that level for wave 5. That indeed is happening as we speak. So that trade is over. That trade, if you looked at the wave analysis, might have picked up from that analysis. Perhaps, if not, no problem. But you know, that's behind us at this moment. What I would be looking for now for the intermediate future is a potential bounce at the minus 61.8 target. Unless price breaks above it, if price starts to close with near the high, pushing above this minus 61.8 target, then I'm not interested in shorts anymore. And I might wait for price to get to the R1 and minus 100 target at 128.25. That could again be a bouncing spot. And the Aussie, I'm going to be honest with you, is messy. I don't like this chart that much. Um, there is some momentum to the upside, but keep in mind, 5 to 6 candles not breaking this high. 1, 2, 3, 4, 5, 6. This could be a hook back. One thing I do find interesting is that if there is a big wick like this, that could indicate that this is a weakness for more downside. So the wick could be a trigger. Tomorrow, 4-hour candle close below the pivot point like this on a 4-hour chart, maybe 1-hour chart, could indicate the bigger reversal on the Aussie. That might be something that is interesting, but not today, not right now. Let's see if we can find something for right now. That would be sweet, but it's not always a guarantee. Depends on many factors. It has to be kind of coincidence that something sets up within these 30 to 60 minutes. But let's take a look at the bigger structure on the Kiwi, going sideways here, too close to resistance. If it's some candle like this, that would be a pretty hefty resistance, hefty reversal candlestick pattern. And maybe some retracement of that wick or a break of the low, and we could see price continue with that rejection. That's something to think about on the Kiwi, is a reversal. Alrighty, let me change the template here. This is a different template that I use for my own trading, but this is a template I use for showing my charts because it's a bit more viewable. It has only a few indicators, so it should be easier for you to spot and recognize and analyze and look with me, look over my shoulders to my charts. The other kind of chart I use is a bit heavier on the indicators. It might be a bit more complicated, therefore, to follow along. So this has the big benefit. For this template, I use the moving average. I use Admiral pivot points. I use Admiral Keltner, both part of the MT4 Supreme Edition package that you can try out for a month for free, and the Awesome Oscillator. The dollar CAD is moving to the downside, and that was a bit difficult, but eventually finished the kind of correction, downside, hook back, continuation. I don't see any particular trade on this right now because price is approaching S1. It's trying to break through it. I might see something if price is making a mild kind of flag like this and breaks to the downside. That might be worth it. Euro is booming to the upside, as you can see, slowly but surely, and then started to take pace here, especially because of the euro dollar, of course, moving to the upside strongly, but also the dollar yen moving to the upside. So that kind of propelled the euro yen to the upside because it both kind of works in, ties into euro yen upside. Euro dollar strong and the yen weakness, so euro yen is really moving up. Here too, I'm afraid, I don't want to be repetitive, but I don't see any entries because of the fact that price has moved up so much so far. What I do like is this 15-minute momentum. What I do think typically, from my experience, it's not 100%, of course, obviously nothing is in the Forex market or any market for that matter, but what I do like about this is strong momentum. And on a 15-minute chart, there should be follow through. So what I would like to see is kind of a small bull flag like this. Doesn't even have to be too long. I would like to see price probably go to the 23.6 fib. Not sure if it'll get there, but that would be sweet. Once again, I'm not sure if this is particularly the turning spot, but wherever that turning spot is, whether it's here or a bit low or higher or even higher, I will put the fib on that and see how that bull flag shapes up. This should go back to the 0 line. Or it doesn't have to actually. Let me check the 5-minute chart. Hang on. Well, this should retrace back down at least, or get close to the 0 line. Preferably get totally back to the 0 line and move up again. That's when this retracement has finished and we should see a higher high. Then we should get divergence between these tops, and we will probably see maybe another correction and then again an upside, something like that. There's one advantage of such a momentum, and the fact is that the reason why it's an advantage is that there's a good chance that price will, after that small correction, still continue for one or two higher highs or lower lows in the opposite scenario, of course. Not a good trade, not a good time to trade now because it's blasted away. And where would you put the stop loss? I mean, I don't see any particular entry. I mean, I guess, on a 5-minute chart, one might still see some corrections. Even here, difficult to see. Here, there was a small bull flag, for instance. That could have been maybe one way to take a trade, break out halfway that area. Now, I think is really not that great of a moment. It could still push 20. Who knows how many pips it could still push. I, however, would like to wait for that retracement and wait for the oscillator to show me that. But I think there's a good chance, though, that once that has happened, that upside for at least one higher high, if not two, is a pretty good probability. Pound yen also moving up to the upside as explained last week. I put a fib from here to here. Does anyone remember this fib? And I remember I was talking about 5 waves up, and after an ABC correction, that there's a good chance of price finding support at either one of these 4 fibs. So anyone taking a position trade at 140 could be up more than 300 pips at the moment. Of course, if you manage to keep that trade for that period of time. I did after that also say that this is a pretty strong reaction candle. It probably is a good bounce. Oh, no problem, Angel. Happy that you're here at this moment. Doing very well, a bit busy, but otherwise all fine. Hope you too. We're going to check gold still. Haven't done that yet, so that's good. So then I talked about this candle. I said that there should be a retracement of the halfway because it's too close to resistance, and that could have been another entry. So anyone maybe following this analysis could have had 2 entries potentially to this upside. Potentially, yeah. Of course, this is just analysis. Trading is another matter, but the analysis did prove out to be true. We got the retracement and we got the continuation. Problem is that price has just moved away from any kind of consolidation. It is in a momentum, so we got to keep an eye on these 50-minute charts. I think same like the euro yen, same like the pound yen, and look for continuation. Let's take a look at the euro pound to see which one could be better. The euro yen or the pound yen. The euro pound is moving up, so the euro yen looks a bit better to me. What type of the zone? I'm not sure which zone you think I'm looking at. Basically, it is not necessarily a zone. Of course, the 23.6 fib would be pleasant. 126.35 would be nice if price gets down there. I'm not sure if it will retrace necessarily to that level. What I would like to see is the oscillator retrace. That's my primary kind of measurement, is that the oscillator gets down and then turns up again, preferably hitting the 0 or just below the 0 line. And if we see an action like this, then that would indicate that this correction is finished. I will look for maybe some 15-minute or 1-hour candlesticks reactions as price makes a correction like this. It would be nice if price gets to the 23.6 fib. Max 38. I don't think it should go below the 38. So if that happens, those are good zones too. 126, 126.35. I think that those would be solid levels that price will bounce. But it's not sure what those levels are as yet, because if price, let's say, pushes higher like this, I would need to adjust the fib to the next highest candle. All right. At one point, this will make a correction, but not now because we're having higher highs. This will probably correct. Probably because this is a bit iffy because it's so strong, this momentum. But if after 5 to 6 candles have failed to break with a higher high, there's a chance that it could be the start of a correction. We have a downside, upside, and downside as 5 to 6 candles do not break this top. And that makes a correction, and then we have a bounce like this. This pattern, I think, is a pretty decent likelihood. considering the momentum. So yes, pity we didn't have the momentum. We were not looking at the charts perhaps together when here or somewhere here. But so now is not a good moment. But if that pattern happens, I think it's still good for future setup. All right, euro odd making the same pattern. Pound odd 2. We could take a look at the odd is in it to see which one is better. It looks like there's odd strength and New Zealand weakness. And euro strength. So your New Zealand could be even better. Let's take a look at that one. Yes, and look at that. What a power to the upside indeed. And this has been trending long to the downside. Look at this. We're talking about 6 weeks. We're talking about 1,000 pips, maybe more. And price we're tracing already 1/4 of that. So pretty strong. And the reason is euro is strong versus the pound. New Zealand is strong versus no, it's actually the Aussie that's stronger. Sorry, I'm making a mistake here. Yeah. Therefore, our euro New Zealand, of course, moving faster than euro odd. Yes, I hope I have that correct. And yeah, all of them are moving up pretty fast. But euro New Zealand on the 50-minute chart could be a good one. We could put, I think, a fib from here to here. Once again, wait for the oscillator to get back. Wait for the pattern. Wait for a bull flag. Wait for a triangle. Any of these chart patterns could be excellent information, excellent indications of upside continuations. 1 second, folks. All right, so that's one of the advantages of this momentum. I think the same is valid for euro yen. We can take a look at how let's see how the yens play out versus the Aussies and the New Zealands to see which one could be better. The euro yen or euro New Zealand. Let's take a look at the New Zealand yen. Alrighty, here we see New Zealand yen, and we see that upside is prevalent at this moment. We have some wicks though, but definitely the uptrend is strong. So we see New Zealand is stronger than the yen, which actually means that if we had to choose between euro yen and euro New Zealand, yen is weaker, so euro yen seems to be the optimal one at this moment. But I think it's all to have potential considering the momentum at this moment. So all in all, I think that euro yen number 1, euro New Zealand number 2. After that, probably reversals of the pound dollar, dollar yen, potential ideas. Aussie reversal to the downside potentially. That is probably it at this moment. Euro yen and euro New Zealand, I think, look the best in my view. We can take a look at gold indeed. The angel is asking, do you think that gold is bullish now? And has some levels to think about. Let's take a look at that. Alrighty, so let me start again a bit from a higher time frame. Oh, sorry. So what we're looking at is basically a break of the lower low. Unfortunately, therefore, this particular pin bar or this bullish candle is more or less invalidated. The low of that candle has been broken. Now that does not necessarily mean everything, but it does indicate that this week we have a lower low. All right, it does not mean everything though. We also know that, like last week, we were saying we are seeing price move from the double top. There could be a double bottom, and all in all, we see 5 waves up, probably 1, 2, 3, 4, 5. Hence, we can put a fib from the bottom to the top, and we saw that price already bounced at the 50 fib roughly. Price can move down to the 50 fib and bounce again, or even go lower to these lower fibs and bounce later on. So space to the downside still. Question is this a correction that is going to last deeper, or is it going to basically finish now and start the upside? So from a 4-hour perspective, we can put a fib from here to here perhaps. Reach the minus 61.8 target. I think that at this moment it's I don't have any favorite necessarily. I don't think that there is any particular up or downside that I have much favorite for. We could put these support and resistance levels on the chart, of course. Basically, that's indicating a break above that, I think, could be a good breakout to the upside on the 4-hour chart. For the moment, though, we're in a downtrend on the 4-hour chart. And we also have the fact that on the daily chart that this might still test the support lower in here. So I think it's vulnerable to bearish pressure at this moment. I personally don't think that yesterday's candle was necessarily a good bullish signal. There was a bit of wick, yes, but still the candle was bearish. I think that is not a great signal. So for me to become bullish, I would probably need to see price above the weekly pivot point tomorrow or above these tops, preferably above this trend line for me to start be interested in an upside. At this moment, it looks like, although ultimately the entire formation is bullish, and I do think that eventually this will break the upside, the question is when. And I think that that could happen at a lower spot, either at the red line or at this purple line or even lower at the 61.8 fib. So this upside has also seems to be more like an ABC. Now we'll know more about that when price breaks through this particular top. If it breaks through the S1, it's invalidating the potential 1, 2, 3, 4, 5 sequence, which does not seem likely at this moment, but could happen if price does not break below this. But if it breaks below this, let me make this blue, and the S1, then I think there's a good chance of a downtrend continuation. This could have been an ABC. This was a breakout like this. So we had a potential break, pullback, continuation. And I think that that does then seem more likely. So, but that's just my view. Of course, everyone has their own view. I think that that's very important, obviously, and it's good to test your view and see how that works out. And if you think that the results are not as good, then try to improve that, learn from it, learn other tools, try to work on getting those numbers up. But from my perspective, I would not be looking to buy myself. And I would rather wait for price to break above the weekly pivot point or below the S1 probably. All right, so that's my view at least. It was a bit quick this session today, but I really don't have much to add. I think that the thing is that the market is loose. Price is fully in swing. And this is not really a great time to trade. I would like to see retracements on the Euro Yen, Euro New Zealand. I do see some interesting reversals maybe on the dollar yen, pound dollar. Of course, that's a bit contradictory, dollar yen and euro yen upside, dollar yen potential reversal. But so keep in mind that the dollar yen is a reversal idea. That might not even pan out. It might just crash right through the 112.50 and forget the reversal, and the euro yen will go with it, right? Or the euro could push it. The euro could push to the euro yen, not so much the yen part. So those, some things to consider. Aussie could be interested in downside depending on the candle today, tomorrow. Your dollar could be interested in the continuation tomorrow to the upside. And I guess that's it for the moment. I think the trade that has, let's say, the most expectations today is probably going to be the euro yen and euro New Zealand. I don't think that the euro dollar or dollar yen or pound dollar are trades that will pan out or shape up today. Aussie also is something I want to wait for today. So those are kind of floating ideas I have for tomorrow or later this week regarding those four pairs, maybe even the Kiwi. Euro yen, euro New Zealand, I think are more realistic for today because there's momentum on the 50-minute chart. Just need a bit of pullback and I think continuation. Seems a bit more doable for the moment. So I think we can keep this session a bit shorter than usual because of that factor that the market has moved already so much. But you have at least, I think, an idea of what I'm looking for the moment. You can check out, of course, more webinars here with education, Forex, and CFD webinars. Yes, be aware of course, news events. Yalen, I think, well, volatility to a certain degree. I think that, let's see, she's speaking at a academy in London. Difficult to say. I'm not a big fundamental news reader here, but I mean, considering the U.S. is weakening a bit, I think, rather, compared to what we expected maybe at the beginning of this year. Despite that, the interest rates are still going up. So I would be curious to see if there are any kind of messages regarding that particular divergence, perhaps. It's a small one. Is there any message that hints at maybe a slowdown of the interest rates? How do they see that slowdown in stats a bit? That could be interesting to keep an eye on that, but I don't think that there'll be anything major either. So ultimately, I think the technicals will just keep going, especially after the news event pretty soon. But that's just my view. Regarding trading, I'm just keeping an eye on a retracement after these strong momentums. All right, I feel a bit that it's short, but really with this momentum in play and the dollar, I feel like it's better to wait. I think it's better to keep it like this for the moment. We're back tomorrow with Nenet's session and my own, pretty close to each other. In fact, so I hope to see you in those webinars. And actually Thursday, by the way, we have a webinar on the forecast of the second part of 2017, which I think will be interesting for you because we're going to take a look at the next 6 months, the second part, and what we expect for trends. So I think that could be very interesting, and hope to see you there. All right, wish you all great trading. Cheers. Hi, sweetheart. If you want a cucumber and olive cake.